Talk about earnings itself. We have Ugro Capital, one of the companies that we're going to talk to today. The lender's disbursement declined about 35% sequentially. We have Shachindra Nath, who's the Vice Chairman and Managing Director of the company, joining in to discuss the numbers in detail. Thanks a lot, Shachindra, for joining in. I remember very clearly that you said you're looking at 9,000 to 10,000 crores of disbursements in FY24. That was last year. Let's talk about FY25. What is the kind of disbursement target that you have? And a stat that stands out for me is that the disbursal to AUM ratio has fallen to 9.3% versus 24% quarter on quarter. What explains this divergence? And if you could give us targets for this year as well.
So look, first quarter always is little slower for most of the lending institution. This time it has been little more slower than what we would have expected. But our belief is that, last full year, as I've spoken to you earlier as well, we were at the run rate monthly disbursal of around 550 crore per month. We ended the year on the same run rate. We raised capital and we are gearing now. The system is moving towards more higher monthly disbursement. And that is designed through our micro enterprise branches, which is going up from 100 to 150, which is now complete, to 250 location now. We expect that our monthly disbursement by the end, we will end the year, exit the year should be right around 900 crore. We continue to believe that our disbursement this year should be higher than at least by 25 to 30% than the last year.
All right, disbursements 25 to 30% higher. You were giving us a number which we missed. Could you repeat that number for us?
I was saying that if you look at our trend for last whole year, monthly disbursement was in the range of around 550 crore a month. First quarter was little slower for the month of April and May, but we came back very strongly in the month of June. In the month of July, actually, we are back to our full flow. And as we progress in next 2 quarters, we think that we will stabilize at around 750 to 800 crore monthly disbursement targets.
All right, Mr. Nath, good morning and welcome to the show. So we'll keep an eye out on that 750 to 800 crores from the normal run rate that you were seeing of around 550 crores. Got that. Could you help us out with what's the outlook on the NIMs? I'm just looking at it. I believe there's a ratings upgrade as well that's come in there. So how does this change things for you in terms of cost of borrowing? And what's the outlook on the NIMs?
Look, this is very good news. For an entity like us, which are not supported by large corporate, we are largely institutional player, which means our rating reflects our own standing. So unlike some of our peers said, when rating is a reflection of who the parent is, our rating reflects our core strength. And we have got 2 upgrades in last 4 months, first by CRISIL and now by India Rating. And on the shorter tenor, we are at the highest rating. Now, fortunately or unfortunately, this rating has come at a point of time wherein the liquidity, especially the RBI narrative of banks not to lend too much to NBFC, doesn't help, and neither the rate cycle seems to be changing early. But we are still hopeful that as we progress in next 2 quarters, our cost of borrowing, we have guided that our total cost of borrowing should come down by at least 50 basis points as we exit the year. But some portion of that should get reflected by 25 basis points in next 2 quarters.
So what does that mean for your NIMs? Because, I remember the last time we spoke, you said that NIMs won't see a much downside from levels where they are right now. And that time it was closer to 9%. Since then, it's come closer to 7%. So what is the rough range that you're working with? And especially with your cost of funds coming down, cost of borrowing coming down, can we expect the NIMs to go back to that 8% vicinity? Or will they be around that 6.5% to 7% this year?
No, I think so. We'll maintain the NIM. This first quarter is not truly reflective of how the whole year would be. Because our portfolio mix is, the product mix is changing. Our micro enterprise business, which operates at around 20% of gross yield, which was around 12% of our total AUM, should go to around 24% of total AUM this year, 40% next year. So just because our 150 basis point of yield increase in next 8 quarters we are targeting, our NIMs would go back or improve slightly from where it was at exit quarter 4.
Okay. All right. Mr. Nath, your AUM, last reported numbers around 9,200 crores. How do you see this number wind up, say, by the end of this year? Because there'll be some repayments as well. There'll be dispersals as well. Put that together. What should it be? And say in the next 3 years from now, what is the target out there? And help us out with segment-wise. How will it look? As of now, what is it? And say in the next 3 years, how do you see it shape up?
Yeah. So look, our long-term aspiration is to build India's largest small business financing company. We know that in last 3 decades, we have seen emergence of a very large consumer financing business, large gold loan company, large tractor financing company. We continue to believe that in last 7 or 8 years, the MSME economy is now very buoyant. The fundamental shift of digitization has taken place, and that's why if the MSME economy has to contribute roughly around 40% of our GDP, then credit has to go. The gap is very, very huge, and that's why we think we have all the right things going for us to be one of those large players in MSME financing. Now, what mean large? I look at it in a 10-year time horizon. We should be a very, very large company, but we continue to grow at this pace rate at which we are growing. Our AUM should grow in the range of, we have been doubling our AUM every year. We were 3,000 crore in 22, 6,000 crore in 23, 9,000 crore in 24, and roughly around same range or little bit higher we should grow this year and next year.
All right, if that was supposed to be the case, then we'd look at numbers closer to 20,000, but we'll talk about that when we come to that, Mr. Nath. Finally, before letting you go, the rate at which you are growing, you are speaking about yields increasing, the cost of funds reducing. All of that does beg a question towards asset quality as well. Will there be ever an accident out here? So what is your asset quality outlook from here on, both on the GNPA, net NPA front, the provisions that may increase? If you could give us a sense of the credit cost target that you have from here on for the next couple of years.
We have said that, through the cycle, we would target a 2% of total credit cost, and that is a function of the blend of MSME financing we do. We do right from a 5 lakh rupees of secured loan to 3 crore of secured loan. We do multiplicity of product across the nation. We do prime secured business loan, machinery, rooftop solar, micro enterprises loan. And as we grow, we are granularizing our portfolio by going deeper into the India's hinterland. And we believe as we continue to grow in the lower ticket size, little higher yield, more secured businesses, the economy is more resilient, customers are more stronger, and that would maintain the portfolio quality. Last 10 quarters, our login to approval rate have remained static at 30%, which means for every 500 crore monthly disbursement, almost 4 times of that we originate. So we maintain credit quality by controlling the funnel, and we'll continue to do that.
Okay, Mr. Nath, appreciate you joining in. We'll hold you to these numbers, wishing you and your team all the best. The next time around, we look forward to having a chat with you. For the time being, let's shift focus